Controversial stock. Why am I saying controversial? It's a software company. And if you haven't been seeing the stock market, not only have crypto been blown out, but the number one sector that has been absolutely getting blown out is the software companies. Stocks like Apple and Unity, Salesforce have been blown out 40%, 50% of market caps in the last month. Why? One of the main reasons is because new LLM and AI models can do ads, can do software things a lot better and faster now. And if companies aren't integrating them into their platform, there's other platforms that can just do it for better and cheaper. And for this overall stock market bearishness and sell-off, I will absolutely not be doing a limit order on this at all. Absolutely got cooked on Ethos. If we would have just done pre-IPO and said, hey, for Ethos, and said, hey, it's opening flat, we should probably just sell out, we probably wouldn't have gotten such a huge loss. And for that main reason, pre-IPOs are amazing, especially for good companies with good backing. You can get in early and see what it's going to move, and most likely, most of the time, it does not go much below its IPO price unless you're a trash company like Navan. So that's general consensus there. Just going to give you my ranking. I'm going to allocate some, of course not all in. A potential avoid, but I'm going to be allocating some for these reasons I'm going to specifically state in this video here. So the main reason I like this and other people do like this is because 50% of the company is owned by Blackstone. I've talked about Blackstone and BlackRock before, but they are the world's largest alternative asset manager. Managing over $1 trillion in assets, and they have not had an IPO that has gone down on the first day in a very, very long time, in multiple years, which is a very good streak. They're a very reputable company, and you want to be backed by them, and you want to invest in companies that are backed in them. So that is my number one compelling reason I do want to invest in this company, and I will get into backing, and there's some of the reasons Ethos didn't do so well, and the reasons Equipment Share did do so well, and some of the reasons that Liftoff Mobile has in common with them, which we can use to learn and change our strategy as we go down. So as we're looking into the company buyback, so when we're looking, this is basically buying back, or insider buying is a strong sentiment of how they think the stock is going to do and if they're going to cash out or not, basically. And one of the things I should have been paying a little more attention to for Ethos, which I overlooked because they had 50% year-over-year growth, which is crazy though. So we're just comparing this. Equipment Share did the best. They had 20% bought by insiders. BitGo, which had notable names, which is why they did amazing on the first day. Very trash company, but they had the crypto hype and they had backed by Goldman, a little bit of buying by Goldman and Nasdaq. 12% insider buying, with Ethos being the lowest at 5%. And there's other stats I'm going to show later. But Liftoff Mobile does have 0% insider buying. So you would think if you just ran these numbers straight up that it would be terrible because software is going down. There's none insiders are buying, so they don't have any confidence, which isn't true at all personally. If we go to this other chart, it says we're going to use money gone to company. So we're going to see how much money is actually of the IPOs going straight to the company. If we see Ethos here, it's only 50%. A very, very large amount of the shares being sold are by insiders. 5% of the insiders bought it, and 51 are selling out here, as we see. So mostly a cash out. So there wasn't a lot of money being injected into this. A lot of it was being sold out here. BitGo, most of it was being put in, but still we have some selling off. And then number one, Equipment Share, which did really amazing. The company didn't even have as pretty, as lined up as the numbers as Ethos did, and all the money went straight to the company, even though they didn't have a ton of debts, and 0 the insiders exited. With Liftoff Mobile, we have 0 insiders buying back shares, but 50% of the company is owned by BlackRock, so they don't need to buy more. And 100% of the money is going towards debt and de-risking. They're not selling off any of their own personal shares. They're just adding new shares to de-risk their debt, since they do have large amounts of debt, which is the main reasoning. And personally, if I was Blackstone, not BlackRock. If I was Blackstone, I wouldn't add any new shares to a company that could potentially be overridden by AI very soon, and if this market is scared. But personally, a lot of the software selling and Wall Street selling of software companies is a little bit oversold in my opinion, which is good. If it makes the valuation for Liftoff Mobile smaller. It's definitely making its competitors smaller, which doesn't really have a factor in the IPO. But if I can get it for any cheaper, I'd be pretty happy with that. So next, let's go over the general numbers here. Nothing too special. They're around the middle of the player. I'm going to show you how AppLovin and Unity been doing, which, as I've been hinting at the beginning of the video, they have not been doing good in the past month due to the sell-off in the overall stock market, tech, and especially software, if you've been paying attention to the overall markets. But a pretty large market cap size, like 4.8, this is what you want to be seeing in IPO to know that they're a good growing company, just on overall size. And of course, AppLovin, you probably heard of them, 160 billion, they're the main thing that's going to be running ads here. And Unity, games like Asphalt 8, all those mobile games mostly run by Unity software. You can make games on it. Yeah, and they also run ads as well, but AppLovin's more comparable to Liftoff Mobile. Annual revenue, not really a good comparison because they're different sizes. Year-over-year growth, 30%, which is very respectable. 68, absolutely blown out. This is why AppLovin has done, I think, 400% in the last 5 years. That is almost 100% each year, which is absolutely crazy number. Of course, they're back to break even after their 40% drop. They did 50% in the year right now. They've been just doing 50% in the year, but of course they got cooked. But if you've been holding them in the last year or last 5 years, you're still doing amazing because these things are growing extremely fast. Well, Unity software is getting cooked. Their margins are low. They're not making a lot of money. It's absolutely cooked for them. Liftoff Mobile, respectable. Of course, if you compare it to AppLovin's numbers, it's nothing. But we're not looking for 100% gains in a year. We're just looking to get in and out on the first day. And of course, this is their main downside. Their net loss, and of course, their debt is a decently large amount here compared to AppLovin, which is profitable, and Unity, which always trades, goes between profitable and unprofitable a lot. Just a random company. Well, not random, they just move up and down a lot, very unstable. But due to the large amount of debt, their valuation compared to their target IPO valuation is much lower, is like twice as low as AppLovin, which is at a 45 PE and a 36 premium of an EBITDA when you account for free cash flow. So Liftoff Mobile is trading 2 times cheaper using that metric. Of course, we can't use PE ratio because they're not profitable yet, but using this metric, they are compared to the growth, it's nothing like AppLovin. But as we saw from Ethos, even if you have the most growth in your sector, if you are overvalued, it doesn't matter because you probably won't be doing as well, as we see from the like 5% drop after open, 15% first day, 30% till now for Ethos. So pretty good valuation and pretty good numbers overall, and I love the backing on this. As we go to AppLovin, like I said, 500% past 5 years, even with that 40% drop, which wiped out almost half of their market share, right? Probably more than half, the 50%. So that was probably 1,000 before. So they were doing amazing numbers. And of course, we have their past month here. Ouch for everything. Ouch for my portfolio. Ouch for crypto. Ouch for the stock market. And Unity losing because they just suck, but getting even hit harder for extra 10% because they suck, but another 40% down because the overall software sell-off, as I've been saying. So back to my consensus, pre-IPO, yes, I'm doing pre-IPO, numbers look good. Unfortunately, the stock market does not like the sector right now, but I will still be having faith in Blackstone to carry this thing out, and because they're not selling out, they're holding and they're injecting money back into the company, I think we have a very low risk of losing a ton of money here. Worst case scenario, you're down like 5% after pre-IPOs, sell instantly. I'm not holding, I'm not waiting for a limit order, I'm not waiting for everybody to panic for this one. There's going to be better IPOs in the future. SpaceX, ChatGPT, name value gets you crazy gains, and the name value of Blackstone is going to get us a good amount of gains, I believe here. I'm gonna, of course, be doing a smaller amount just because the market is shaky. Even like I said, Blackstone, they even considering they might postpone their IPO just because of this absolute crazy sell-off. Bear market plus software sell-off is insane. So be careful if you're going to invest in this. Please do not settle an order pre-IPO. Dip your toes. One of my most favorite people that does IPOs is Scott Alerts. He's putting his own $50,000 in here. That really boosted my confidence in this as well. I'm personally doing 1,000 in here, but if you don't feel comfortable, you can go ahead and skip this. If you like this and you don't mind if like 5% loss and you like the 20% upside in pre-IPO, I would go ahead and dip my toes in this. We're going to get plenty of IPOs in the future. Blackstone and BlackRock just noted like a couple days ago that one of their higher ups said this is the season, this is the year of IPOs, which yes, it is the year of IPOs. We got a ton of IPOs, more to come, and there's a crazy list of IPOs to come. So don't get greedy. If you are scared of losing money, there's plenty of good opportunities in the stock market to buy a dip right now. Everything's basically on sale, especially Bitcoin and Ethereum and a bunch of other companies. Amazon just dropped 10% today. Check my portfolio. Ouch. It's all on sale. So IPOs, stock markets, we will be buying up like crazy. So hopefully you guys like the analyst. I'll be giving you updates on my shorts version YouTube and TikTok, so you follow me there. If it comes out tomorrow, I will be streaming 8 a.m. Pacific time, 11 a.m. Eastern time. If it is tomorrow, which I'll give an update on TikTok, and I'll probably have like 50 people, 20 to 50 people there, and I'll see you guys later. Oh, let me end this.